What's going on out there, YouTube? Welcome back. We have another dandy for you today. This is the Money Cube channel, and what I'm going to do is talk about the bottom. Everybody wants to know, with this stock market, with the crypto market, we all want to know where the bottom is. Meaning, when will the market turn around? When will we start to go in an upward trajectory or go into a bull market? Because we're still very much in a bear market right now. We've been on a downward trajectory for over a year now, or pretty much right at a year, roughly. So what I'm gonna do is I want your input because first of all, these are my opinions. This is not the gospel. These are my opinions, and I'm not suggesting you buy or sell any stock. If you do so, do your own due diligence and invest only what you can afford. All right. So what I'm going to do is look at a few stocks here, and it's in my strong opinion that, first of all, I'll go ahead and get it out there in the front. I think we will be somewhere around the bottom after the first quarter of 2023. So I feel that we'll be at or close to the bottom somewhere between March and April of this year. Now, in saying that, that doesn't mean we're going to turn around and go right into a bull market right away. But I think there will be some type of leveling off right there. And, give or take a month, maybe a month prior or a month later. But that's kind of what I feel. You guys let me know what you feel in the comments based off of what you've seen, based off the history of the stock market. And things that are going on right now, because I'm basing this off of the blue chip companies out there. And so let's look at that right now, okay? This is Cash App Investing, and right now we're looking at the most traded stocks on the stock market. And if you look at a lot of stocks, the blue chip and the big name companies over the past year, they have lost or for lack of a better word, I'll say lost about 40 to 50%, roughly. About some a little bit less, some a little bit more than that. But you're looking at about a 40 to 50% drop within the past year. So of course, Tesla is having issues, mostly or partially because of the antics of its founder and owner, CEO, with the going back and forth hinting about the Twitter purchase and then pulling back off of it and then going through with it. And so he's not tending to his flock. He's not tending to the flock like he should. And his stock, the stock price of Tesla has fallen partially as a result of that. All right, so let's look at the yearly performance. Tesla is down 66%, so it's a little bit more than that 40 to 50% range. It was trading at $362 a year ago. Now it's trading at, if we come down here, $292. So it's taken a significant drop. All right, now let's come out of this. Apple, the biggest name in tech, one of the largest companies out there, is down only 26.8%, which is not terrible considering the economy and the situation we're in. But for Apple, that's still major for Apple. We're in a bear market, but they won't have as steep of a hill to climb once we turn around. Looking at Amazon, Amazon is down almost 50% on the year, which is pretty significant, pretty major. But one of the reasons why I'm speculating and why I'm looking at the end of the first quarter, beginning of second quarter for the turnaround or for the leveling off, is because it can't go too much farther. The economy, things cannot go too much farther. So I'm looking at it may be another 10%, 8%, maybe 12%, but it can't go too much farther south. All right. These are blue chip companies we're looking at right now. Again, we're staying in that same 40 to 50% range. As I said, Nvidia down right at 50% on the year. Facebook is kind of in that same Same little boat as Tesla. It's down 65%. Facebook has had some issues because they are focusing on that meta universe a little bit more than on their core platform. So they have taken a little bit of a step back because of that. And I think that is by design. But nevertheless, 65%. AMD, Advanced Micro Devices, down 58% on the year. So it's knocking on the door of 60%, but not quite there. It could go a little bit farther. I actually think it will go into the 60% range before we hit the end of that first quarter. Netflix down 51%. Check it out. Google, Alphabet is down about 40%, or right at close to 40%. So if you pay attention, what I was looking at is, again, it was trading at $147 a year ago. Today, it's trading at, or as of Friday, it's trading at $89. So again, we're looking at that 40 to 50%, upper 50% range that most of these blue chip companies have fallen. And we'll look at Visa here. Visa, which is a diamond in the rough, because pretty much because, as you all know, Visa deals with credit. Yes, their logo is on debit cards as well, but Visa lends out a lot of money. So if you keep it in perspective, being down 5%, there is a huge reason for that. You can't lump that into the other blue chip companies, because it is so easy for people that have credit cards that have owned them for years, or that have recently acquired them, to just go out and swipe it and basically borrow money that they're going to have to pay double and triple back for, with the interest rates that will compound month in and month out. So Visa will definitely not have a steep hill to climb once we hit that bottom and turn around. And real quick, what I'm going to do is show you a few of these other major companies that are not considered blue chip, but still big companies. Planet Fitness, 13% down. The reason why I bring this up, we're going into the first of the year. You all know what that means. People will start getting their fitness plan together. They will start hitting the gym, signing up with that gym membership, buying those Peloton devices and trampolines and all those devices they use to work out, dumbbells. So this industry will take a major jump between January and February. But keep in mind, remember I said this, just because a lot of money is going to be spent in the health industry in January, February, doesn't mean the stock price will shoot up, because you could be looking at some manipulation with stuff like that. But overall, it's not a bad thing to swing trade going into January, February. If you are a swing trader, I will be doing that with Planet Fitness. So it's not a bad thing to look at doing, but just keep an eye out on it and kind of go day by day with that. Robinhood, which is the other platform that many of you, and myself included, will trade on, stocks and crypto. Robinhood down 56%, which is following suit with a lot of the other big companies. Shopify is actually a little bit over that limit, that threshold, but it's at 75% down on the past 12 months. That is a little bit, I won't say a shocker, because inflation has hit really hard and we're in a recession, but it's about 10% more, 10 to 15% over what I thought it would be down by. And we have Target. This is the final individual stock that I will show you guys today. I won't keep you too much longer. Target is down 36% on the year. A lot more than Walmart. Of course, Walmart, you have a little bit different demographic. You have, all walks of life. People from all walks of life shop at Walmart. Target is a little bit more, what's the word? Little bit more upscale than Walmart, and you don't have them in as many neighborhoods as Walmart's. So Target took a little bit more of a hit over the past year. Now, what I'm going to show you real quick is some of the ETFs and how they're performing. And you can actually open the ETF tab in Cash App Investing, and it will show you a long list of all the ETFs that you can trade. Now, we're going to start with the most popular, the SPY, which is the S&P 500. On the year, it's down 19.7%. And the ETF market is one of your safer bets if you're going to dollar cost average and invest for long-term growth, much like, an Apple or a Tesla or, or Amazon, Google. This is going to be kind of a slow ride if you choose to invest. So, but definitely it's one of those very important things you want to take a look at. And another big ETF that I like, Vanguard, the Vanguard S&P 500, which basically is the same thing as SPY. It's down 19% as well. So, and there are many others in here. I mean, there are many ETFs you can look at. Some of them, 29% down on that one. SPDR Gold Trust is only down 1%. That's quite interesting there. But yeah, many people don't know or realize how many ETFs are in existence. So if you look at this, look at this. I'm scrolling, and there are many different options with the Vanguard and S&P. But your two main ones, if you're brand new to stocks and ETFs, the two most popular are going to be the S&P 500 and then the Vanguard S&P 500. So there you go. Now, what I want you guys to do for me is go down in the comments and tell me if you have an idea when you think we're going to be hitting the bottom or at or near the bottom. Let me know when you think that might be, and even go farther. If you think we'll go into the bull market later on in 2023, I don't think we will. I think we'll be into 2024 before things really turn around. But like I said, I'm looking at between Q1 and Q2 of this coming year before we flatline at the bottom, and we'll go probably a few months to maybe 6 to 8 months before we can technically say that we're in a bull market or an upward bull market run. So there you go. I hope y'all had a wonderful Christmas. Happy holidays to y'all, and happy New Year coming up here in a few days. And man, we're all, if you're alive and kicking, you are blessed. Always keep that in mind. All right. Y'all have a good evening.